Welcome to the Trading Lounge, and here we're looking at the S&P 500. And look, we're in a bit of a tough spot here, and we really just need the market to unfold a little bit further to really sort of confirm wave counts. I'll just go back to the larger picture here, just to start a little sort of story here, because this is the daily chart for the US 30, but most markets are the sort of same. One of the situations is from this low down here at 12,500, we've been looking for a five-wave structure to the upside. Now, many analysts have got the situation in terms of having a top in place now, so to speak, at here, and that would count up for wave one here, back for wave two, but I think there's still a possibility of another move to the upside, and it would count like this from wave two here. This would all be wave three here and not the top, in terms of the one, the two, the third wave to here, the fourth to here, the fifth to here, to make the third, and the fourth back into here, and then the fifth up through there. It's not to say that it's sort of set in stone either, so it's just a sort of it's a possibility. So we've either got this situation, or we've actually got this fifth wave in here as a top here. And if we've got this top here as the fifth wave here, then that's the top of the sort of the whole trend up. Basically the primary wave B, if you like. So this move down through here, though, when we look at that, it doesn't matter what market that we look at it on. It's just the S&P 100, 500 here. So looking down at this structure here, we've been sort of over this a fair bit. It does count best as a wave one and a wave two here, then a wave three down here, and the wave four has moved quite a way back, which is not that normal, but it still stayed with under the price territory of wave one here, and then we've got a five-wave structure to the downside here. So we can count that as wave one, or the A wave down through here. So I've left them both there. Obviously, the wave one would give us, this top in play here, and we'll be looking down for wave one, back for wave two, and a sharp wave down for 3, 4, and 5. And if we've got those 5 waves down, then we'll get a 3-wave counter trend, and then another 5 down, because it works in series of 5. Now, the other thing here, and that was the bias sort of to the count in one way, but the move last night that's moved up through here, and we were expecting a move up as wave 2 and wave B pulling back up into the supply zone up in group 2 here, and the same with other markets as well, but it moved up rather quickly, which is not really the price action of an A, B, and a C coming up here, the C wave. This sharp move up through here is more in line with a wave 3. So if that is the case, then we have to go back and look at this here, and we would have to look at this as an A and a B and a C down here for an A wave, back for a B, and then down for a C wave here. So the ABC here is looked as a corrective wave, and then we'd need to look at this as up for 1, back for 2, up for 3, back for 4, and up for 5. Now, of course, if we get that 5-wave structure to the upside here, such as 1, 2, 3, 4, and 5, what that will give us is an A and a B and a C back through to here, and then another 5 waves to the upside. So it wouldn't have, it's not completed just yet. So we'd still be seeing up for 1 here, back for 2, up 5 waves, up for 3, back for 4, and up for 5. Now that's a real possibility as well. So it really boils down to this little section here that we need to sort of focus on. So if I have a look at that in here a little bit further, is that at the moment we've got from this low here, we can count this one up here as being the A wave up through here, the B wave here, and the C wave to here. That's the corrective rally, and it would need to complete here basically. So this needs to be a top in this area through here, and then roll over from that point. So that's what we need to have a look at. The other side to the coin here is that if this is going to be counted positively to the upside like an impulse wave, then we need this up as 1, 2, 3, 4, and 5 to make wave 1 here. This would be wave 2 here, and then this would be the third wave up through here, and then it would probably push a bit further in that case, and then there'll be a fourth wave here and a fifth wave up through here. So we really need to see what occurs here to see if this, if this actually fails from this particular point here. So that's what we're basically sort of working our way through here at the moment. So look, I don't have a clear answer for the situation, so we just need for the market to unfold further to see if the market fails from here, or this is going to emerge as a 1 and a 2 and a 3 and a 4 and a 5 here, and then we get the A, the B, and the C, and then we get further to the upside. So I just don't know. We just need to allow it to play out there further. It's the same with the European markets, and the Australian markets are a bit the same as well. So with slightly different, but with the Australian market here, just starting from the bigger picture here, we were looking at this, we were also counting this in both ways as well, but preferably with the A wave, the B wave, and the C wave here. So we were looking at this having 5 waves down through here, and then we were looking for the B wave, which is always in 3 waves. So we were looking for the A wave, and then the B wave here, which is also in 3 waves as well, and then the C wave moving up through here. Now the C wave moving up through here is normally about the same length as the A wave here, so the A wave is a little bit longer through here. And we're also looking up at the, the 62% retracement level is pretty much where it is now, but there's also this little gap here at 5071 here, so looking at that being covered as well. So it's not sort of covered there just yet as such. Still got a little way to go to cover this gap in through here. So it's likely to be covered today. But once again, like the US markets, this A, B, and this C here that we're looking at here, needs to terminate really under the 5-1 here. If the 5-1 found support here, then we've got ourselves a different market like the US market, and we'll be certainly moving further to the upside. It'd be interesting to see what sort of drags it up if that's going to be the case, because the HSBC China manufacturing figures came out yesterday, and they were slower. And we've seen, when we have a look at the metals in a moment, you'll see that the copper has, being central to base metals, has moved down further. Gold is coming off, so that there is that those wave 4 rallies that we've been seeing in the commodities is likely to be completing, and then that would also help turn these guys over as well through here. So in terms of day trading, this of course, just done a little bit of work through here. It's really all about this 5 being the second strongest number, and the market here is at 50, 5,050. So you would need to allow it to, unfold through here, find support. But the next levels up here would be, of course, 65, 72, and 80. And it is that 72 that closes the gap at 50.71 there. So in the count up through here, sort of looking at like this really in terms of the 5-wave structure, is that we've got this move up through here, which is pretty fast and sharp, so that's wave 1 and wave 2 to here. Then we've got a very nice clean 5-wave structure here for wave 1 and ABC for 2 here, and then I'm just including this appears to be the 1, the 2, nice strong third wave, back for the fourth, 38.2 retracement, basically coming into retesting the 5,000, gaining support here, and then moving up. So really we've got the 1, the 2, all the way up for the third here, and so the fourth here and the fifth to go further up. Now, because the extension is in wave 3 here, that means that this distance here in wave 1 will be from the 50 here, would get us up to to cover this gap up through here. So it is long today, but you need that sort of support there, and it will be led by sort of financials, but the material sector is still going to weigh heavy on the situation, and we kind of knew that yesterday as well. So when we look at, just bear with me here for a moment, when we're looking at BHP, for instance, and there's others as well, that we could see that the volume. Let's get this in place here. We could see that we had this low here, coming down on high volume here. Then we've had this market, this day move up, but on lower volume than that bar. And then this bar here move up on lower volume than this bar here. So that's a trend moving to the upside, but on lower volume. And this was right through the markets yesterday, in fact, so seeing them sort of being sold off as such, is the case. And when we look at the base metals, you see that the copper is lower, the oil is sort of struggling, but even though it's got support on 88, gold's sort of rolling off a bit as well. So, we've got increased volume here to the downside here. It is a bit of a switch set up on the long side, so a long trade above this high here would be the go here, but the volume here is suggesting more downside for materials, so it would be the banks leading to the upside today and so forth. So, alrighty, let's have a look at the base metal. Okay, I'm just going to start with gold here, and obviously we've had this long move down through here, which is a wave 3. So we've been looking for the wave 4 pullback through here, looking at all the different the levels and the Fibbo retracements and so forth. But it's really, you can see now that it had that strong move up through here, but over the last sort of in 2 or 3 days, it's sort of it's slowing down. But it could also be said too that it's just retesting and finding support on the 1400 here, and that would be a valid case as well. But if that 1400 became the resistance, then that's a sign that it's sort of locked in there, and you'd use that price point, that retest on lower volume, as a trade set up to go short. So we've just been investigating this, and also too that it should be pointed out that because we're in a wave 4 here, and that wave 4s can get sideways and complex, they can become in like sort of 3 waves as well. So this push up here could also just be the first leg of the correction. So we could see this as an A wave, a B wave coming down, and then a C wave slowly going up, and then rolling over, a bit like this guy here actually. So this A wave up here can be this A wave here, same thing, just a bigger picture. The B wave coming back down here, finding support 350 sort of area, and then moving up here, sort of slowly, and then rolling over. So that's what we could get through here. But as it goes, we're looking for that first top here, and it does appear to be. There's a reasonable possibility that it is the case, but like I said, and before as well, is that it's just much safer to be short under the closest largest number, and that is the 1400 here. There is group 1 within all of this as well, which would be the 10, the 20 and the 30 here. Now the 20 is normally quite important, the pivot within group 1, because once that becomes the retested resistance, which it was here because it was support here, wasn't it? And then it dropped through, and then it retested it here, and checking supply up here, and and it sort of confirmed that the supply is moving down through here. So normally when the 2 in group 1 has been locked in there as the resistance, then you can pretty well be assured that the 1400 will be, the next number will become the resistance from that point there. So there's a reasonable possibility that this is in here. The C wave, I have to say, doesn't count very well to the upside here. In fact, we may end up with an ending diagonal triangle coming in here with one more little push here, but it's just not a clean 5-wave structure up through to here, and even if it's to here as well, it's still not there. So it's a bit of a mess. It's not we can't say with a lot of confidence, but we are seeing little impulse waves to the downside through here. So the being high up here, being the overlapping wave structures coming into play now, seeing little impulse waves to the downside. It's suggesting that the top of that structure is in there, but as I mentioned, the A, the B, and the C here may just be a larger A wave, and we come down for a B wave into this area here somewhere, and then a C wave, struggling up there as well. So we need to be a bit mindful of that. Silver's got a bit of a habit of sort of leading the way sometimes. So one thing that's happened here, it's moved under the 2300, and it's locked under there too. So that little move that we can see here is the rally retest. This rally retest into the 2300 here is in 3 waves. So that makes this market corrective here. Even though it may go higher, it's still a corrective structure here. So it means that it is a corrective rally, and eventually this low here will be taken out. So that's something to work there. Of course, you also work the group 2 here, which is the 80, the 72 in here, and the 22, 65, 72 and 80 in through here to build positions in, to add to positions. Okay, the copper market, that's while we're here, this is the US dollar. We'll see this in a moment in the FX section. But the main point here is, we had support back in at 82.50 here. We were looking for a move up to the 83. We got that. We knew there'd be a reaction here, and now we're looking at the first high above the level. So the first high above the level, once that's completed there, then we'll see an A and a B and a C across here, and then we'll see further upside through here. So this is the trading levels classic pattern. Well, this is it here too, really. Comes up. This is at the 72 here, and this is an important 72 because it's 82, 72, 272. So it's that price point psychologically was the resistance, and then it became support. So that's the setup that you're looking for when you're trading, be it long or be it short, upside down. But look, higher US dollar means commodities are traded in US dollars, so it does put pressure on the commodities, and the copper here is quite important to the materials sector. And as we've been talking about, we'll see it bounce off the group 1 coming down, group 1 being 10, 20, and 30, 1, 2, 3, in any degree of structure. And we'll see a bounce down through here as well. So, but as this moves down through here, we're going to see more pressure on the BHPs. This is BHP in the US here. It's retesting the 65 here. It's not moving up at all, is it? So it's not there. It's not there yet. And as we just had a look at the volume on the other ones as well, on the Australian BHP, it's not where don't grab those falling knives, as they say. Okay, let's have a look at FX. Okay, just the US dollar again. Look, just pointing out that. It's working through the process of moving higher. However, there's more. Once the first high is in play here, then there'll be a corrective pattern through here, and then pushing up from that point there. So look, while this is navigating the 83 here, then it's going to be doing the opposite on the euro at the 130. That's the main point here. So looking at the euro through here, this little move through here is corrective, isn't it? It's in 3 waves. Okay, so that means that eventually this 130 here should become the resistance from here, and then continue to move to the downside. Look, there will be support at 129.50 through here because of well, because of there's two particular wave counts that we're tracking down through here, but we can see that there's support through here, so there will be there should be a bounce, from through group 2 here as well, but from here as well through here. So just need to be a bit mindful of that. On the daily chart, if you're looking at Elliott wave on the 4-hour or daily chart, then you know that we're looking down at 127 and so forth. So you just continue to hold short there. If you're short already, then stops technically would go above here. But once the 130 becomes the retested resistance, or rather the next level down, the 129.72, once that's locked in, well, especially after the bounce from the 129.50. Once the bounce from the 129.50 comes back and retests supply either to here or to here, and then locks under here, then you can move those stops down into the next high point from here. But the trend is certainly still to the downside there. The Australian dollar as well is if we just find a daily chart here, there's strong support here as well. This is the 102 through here. So you can just, you can see that there is support there. So it's going to be tough getting through there, isn't there? There's going to be a bounce and so forth happening there. And that's what's coming in now from this area through here. Now, the other important thing here, as we mentioned yesterday as well, is that, this line through here, the 102.72, is a real line in the sand. And, we just know that's going to sort of play out there. So, if this 72 here became support here in a nice retested support, then you would use the 80 here to look to go long on through here. But yeah, look, it's just a little bit tricky. So because we don't know what the S&P 500 is doing just yet, it's a little bit tricky to decipher this as well, because this will follow the European markets as well, and we've got softer base metals as well, but we know that they're finding support, like the copper, and is going to be bouncing around a lot as well. So it's just a little bit sort of tricky to maneuver through here, and this move up through here, obviously we'll have a reaction at these supply levels through here, but if it comes back and then gets up there and finds support there, then you need to be on the long side. But otherwise, continue to look for short trades through here, but it's not going to be easy coming down through here. So you may be better off looking at some of the pairs, against the yen or something, so or the euro. Alrighty, well, that's it. So just also want to mention as well, of course, in Australia we've got Anzac Day tomorrow, so the markets are closed, so there won't be any morning report for that, and I won't do one on Friday morning as well, unless there's something that really moves in the US markets and we need to be sort of on top of it. But the next morning report will come out over the weekend after the US markets have closed. So we've got a fresh start for the week ahead. However, the Elliott wave for the Forex and the S&P 500 and gold and oil will continue to be posted as normal. Also, putting out robo trades today can be a little bit tricky, because we're not going to get around to them again until sort of Monday. So just bear that in mind. Then, if you do have trades open, then you can always go to the UK or the US to pick up a few trades in that direction to hedge whatever you've got here. That said, the mining sector is soft again today, and it will be the banks and the finance that and maybe the insurance and so forth that lead it to the upside today. Alrighty, well, good morning and good luck.